Hello, everybody, and welcome to another episode of Parliament of Pros with me and my good brother Kris here. Got some good stuff to talk about today. So, I guess before we get into it, the Clarity Act. There has been a lot of talk around the Clarity Act lately. I know we were talking about this a few weeks ago, Kris, and you said that if it didn't get passed in the next coming weeks, you think it'll wait until, I think you said fall or winter.
So they go for summer break, and then they start focusing on re-elections.
Okay. Yeah, it's been a lot of they're really trying to push it down the road. So we got Jerome Powell is officially out. He's getting out of there. And everyone knows that Kevin Walsh is going to get back in or get in. And I was read this tweet on Twitter. It says here, the Senate Banking Committee is preparing to notice a markup for the Clarity Act as soon as tomorrow, Friday. And it circulated a draft legislative text to select industry members ahead of potential Thursday vote. And according to multiple industry sources who have seen the text, the language is reportedly still being finalized with additional edits expected to reflect the priorities from Democratic offices. And a lot of people are like, okay, well, the banks are kind of winning because they're trying to compromise on the whole yield aspect. Because what they're having to do is, like, the Genius Act passed, and they were talking about this at Bitcoin Vegas and Consensus. Senator Cynthia Lummis, shout out to her, who had a big play in getting the Genius Act passed. They're basically having to go back and mess around with the Genius Act because people are like holding up the Clarity Act because they know if they got two of those bills, it's going to make it a lot harder for the banks. A lot of people think that we're going to get something signed by next week, and then they're aiming for July 4th on America's 250th birthday for things to get passed and Trump to put his stamp on it. But yeah, obviously this is all hearsay, but it seems like they're really trying to get it passed. What's your thoughts on that?
Well, so if it passes the banking committee, right, it's still got to get past the entire Senate.
Yep.
So they have to collect 60 positive votes or more to pass it. Then once it gets done with the Senate, it actually goes back to the House, who passed it in July 2025, to be reconciled with the version they sent up to the Senate originally. Then it has to pass another vote in the House. Then it has to be signed by the president. And I don't know how long it's going to take in the House, but that could just absolutely kill it right there with the timeline if it's not out in summer. So
yeah,
that's my thought.
Polymarket has spiked up a bit and thinking that it's going to pass, but that goes up and down with anything that comes out. So Polymarket is more of a, sometimes it can be a good predictor, but a lot of times, especially in instances such as these, it's more of just an oscillator as to what's happening anyway. So yeah, we'll keep you guys updated as things are rolling out. Hopefully on the next call, God bless you. Hopefully on the next call, we'll have some good news. Hopefully they keep kicking it down, keep moving things forward. Another big thing that happened this week is Coinbase laid off 14% of its workforce. There's actually some people that I know, I live here in San Francisco, that work there, and they're posting on Instagram like, just want to thank Coinbase for the opportunity. It sounds like the NBA player getting traded is actually, I'm not going to say it's funny because it's people's like it's their jobs, but just how they're talking, it's just like, yeah, I just want to thank the opportunity. I did my best. I had to get back on defense and, just got to get back in the lab. But no, people are they laid off around 700 people, which equates to 14% of their workforce. And people are speculating why. I was thinking to myself, like, man, is it because they didn't make a lot of money? They're trying to cut costs, or AI?
Mm-hmm.
I think it's a mixture of both. But more importantly, another piece of news that came out was that it's been a normal thing for, I think back in 2019, like all of the brokerages cut their fees on stock trades. And now you had Morgan Stanley and Charles Schwab are cutting their fees on crypto trades. And it's just like, CZ was on a podcast with Kathy Wood of ARK Investing. They were talking like, if one firm, a major firm, lowers their fees, everyone has to do it, because if not, you're going to lose business. So a lot of people think that Coinbase is trying to make up for the fees, the money that they're going to lose in fees, by cutting some of their employees and just trying to optimize things with AI, which is crazy, but I mean, it makes sense.
I agree with that. The amount of workers displaced, I mean, it's affecting every single industry, right? And the one thing I didn't read was what class of worker was being displaced for that 14%. Were they like all middle management, or were they all like fresh out of college new hires?
Well, I know one of my buddies who was a recruiter who has been there for a few years got let go. So I don't know all the positions, but if you go on Twitter and type in like #base, you just see a bunch of people tweeting about, oh, I was let go. I'm grateful for what I got to contribute. I'm thankful for working for this person. If you're looking for this kind of position, I'm your guy. It's always that call to action at the end.
Exactly. Exactly. So, I was like, hey, I need something to feed the family.
Yeah, man. Shout out to all 700 of those folks. You know, hopefully they find another home that is good for them and complements their skills. It's the job market's kind of tough right now.
Sadly, I'm seeing, like, the thing that's taken over Twitter a lot is I've used AI to make $15,000 business in 30 days. Like, that's just being posted everywhere. So, like, if every one of those displaced workers goes out and does that for the next 30 days, they'll be fine.
Yeah, you think just use Claude. Create a business.
That's right. Just use Claude. Just tell Claude to get you a profitable Shopify e-commerce store the next 30 days and have all the product there for you. You're good.
Cut and dry. I wonder how many of those are legit, because man, I go on Twitter and I see that, and I'm not gonna lie, sometimes it makes me feel like, man, what the hell am I doing over here? Like
the thing it makes me think is I have not devoted enough time to learn AI. Because in my mind, AI is just a big database of knowledge, and it takes that information and it puts it together in a new format. And sometimes it talks to other AI to get their information. And so, like, it's just a big, very, very fast database for a lot of it. And I was like, all right, well, how can you tell that database to do something without you having to pull all the strings? And that's the part that I haven't really gone through and analyzed. Like, it'd be, if you say, you know, you can tell it to research the steps and say, lay out the steps for me. But a lot of those steps AI might not be able to do. But for the online, like, blog posting, summarizing, you know, market watching stats, it can do that. It can, I mean, because that's all online. It has access to all that information, and all it's doing is grabbing that info and presenting it in a certain way. But does AI really make money? Like, somebody has to tell it, you know, if you see this scenario, the money making decision is this. And like, once you probe that in there, then it can start working that way, I guess. But I just haven't had time to really dig into it that much. I know there's tons of people here in Texas being displaced that are low-level programmers because they just tell Claude to, you know, program this and that, and then the people that were their supervisors now become code reviewers just to make sure that the Claude wrote the code the way it should be, and then they're not even coding anymore; they're just reviewing code.
Yeah. Yeah, you know, it's funny, what you're describing that's needed is what we've been talking about for a while, world models, and that's exactly what Odai is doing, or trying to do, I should say. Doing. I'm gonna share my screen and show some stuff here. They have been shipping. He paid for all the naming rights so that they can use the name Odai across the EU, and they shipped their V1. And guys, don't tell anyone this, but you know, I made a video on Odai, posted on Twitter, and the Odai community really liked it. The founder gave me a follow, and me and Mike, who do the base show, we DM'd him, trying to get him as a guest on the show, like maybe show us how to make a world model, or even try to get him to do like a demo inside of our community. And he says that the goal is so that ODI can be able to represent itself on a podcast. Wouldn't that be crazy?
That would be that'd be like that podcast that they brought Luna on from Virtuals.
Yeah, exactly.
That was a crazy podcast.
Yeah. So this is the founder here, and said it launched its own token and started operating on chain, and it passed $200,000 in earned fees, all paid in ETH. This was on May 5th, and then this person tweeted, said, "Thanks, ODI resume. Resume what you're doing." And I know. That's because I was reading that Coinbase thing and like people talking about resumes, and I just thought resume, man. I've saw resumes so many times today. But yeah, no, they've been shipping, man. They've been shipping, and I got to go back onto my ODI dashboard because you have to like basically stake ODI tokens to be able to use it. But I'm still very bullish on this token. Still accumulating it and Tibber more than anything. So yeah, we'll keep you guys updated on that. I'm gonna try to make a world model and see what you know, if it works or not. You know, you got to test these things out. So now we look at the fear and greed index. We're at a 46. A lot of people are calling for, you know, calling this what is it, a bull trap or a bear trap? Bull trap, I think. A lot of people think that markets are going to take a dip, especially mentioning not just the senators take a summer vacation, but the fund managers do as well. So, you know, that is something to keep in mind. We have had a good amount of ETF inflows lately. If we look here, you can see that, you know, in the past couple of days, it's been some of the largest inflows that we've had. 625 million, 520 million, 467 million. Michael Saylor and MicroStrategies are announcing that they're going to be buying more Bitcoin. What else is new, right? This has been Bud on Twitter as well, saying that he said he was going to sell some to pay dividends. Obviously, he's probably not going to do that. But if he does, I mean, that sucks.
What if he just made that announcement to cause people to sell so he could buy it cheaper?
Hey man, I wouldn't put it past him.
No, because you know his board's got to look at him and they got to look at him and say, "Why are you always buying when it's the most expensive?"
Yeah,
because he just buys. Like he doesn't care. He just buys.
He literally just buys. He's like, how can I? He's looking at all his resources. How can I capitalize this? How can I tokenize this? How can I raise more money and buy Bitcoin? I don't care what it's at. It's going to 1 million. It doesn't matter. I was like that. Yep. That's how he looks at it.
Well, like, that's why he came out with Stretch.
Yeah.
That is a solid project, and it's doing good on Pendle.
Yeah. Yep. So
there's actually 4 entirely new protocols that made their main offering based on Stretch.
You want to break down what Stretch is for the old audience?
Sure. So Stretch is a fund that you can buy, your normal broker, and it's a dividend-paying equity. And what that means is that that if you just own a share of that, then you are guaranteed to get dividends. You know, originally it was paid out once a year. Now it's being paid out monthly, and it is an insanely high dividend rate of 11.5%. For dividend producing stocks, that's almost unheard of.
Paid out in the Stretch stock, right?
Yeah. So as dividends, just like you normally receive dividends for your normal stocks, it's in additional shares, and you could sell them or you can reinvest them.
So almost 1% a month.
Yeah, it's almost 1% a month, and then they're using that as a way so everybody that wants to buy that will pay cash for that stock. Michael Saylor gets that cash and he goes and buys Bitcoin. So he doesn't have to create any more strategy stock or preferred stock. He's literally selling the Stretch fund. And then that's that way they're not diluting strategy stockholders anymore.
Wow.
And what makes it interesting is that the stretch product is being paid out as preferred stock. So all of the dividends go to fund all of the income goes to pay out stretch holders before MicroStrategy common stock owners.
Dude, I would have to say if there was a creative financing awards, Michael Saylor would have to be the winner for sure.
Yeah. Well, they're making a whole new industry. It's called digital credit. So we should do a whole special just about what that industry is and like try to figure out how we can profit from it.
We should make a video on that, actually. That's a good idea. Yeah. No, you're not wrong about that.
It's just like I'm trying to figure out a way to capitalize on X402 agent to agent payments. Like, okay, it's a standard. How can I make money on that standard?
Yeah. I'm really also trying to think about, how to make money when GTA 6 comes out.
That's on Avalanche, right?
I don't know.
It was originally supposed to be, but then it was delayed.
That thing's been delayed for years.
I know they just can't get the models right. They need to look more realistic.
Dude, San Andreas looked realistic enough on PlayStation 2. Just get it out of there. You got GTA 7 to work on, then that'll be delayed a couple years too.
That's going to be delayed until like they're going to have it to where you can feel stuff.
Yeah, you're gonna put on these gloves and put on these things, and like it's gonna be crazy.
Mm-hmm.
Yeah, it's gonna be crazy. I won't be doing any gun missions. I'll tell you that if that's the case.
Mm-hmm. If it make it feel like you got hit with a paintball.
Yeah, you're gonna have to put on like some kind of vesting apparatus that applies pressure when you get shot or something happens or punched.
Mm-hmm, mm-hmm.
In order to play a video game, you have to wear a full suit.
So I was just looking here. GTA 6 is not affiliated with any blockchain whatsoever. So that was all conjecture.
I know. I hear they're supposed to use like a lot of like NFTs and stuff. So I'm wondering like what chain that's going to be involved. Maybe they're launching their own chain, man. I wouldn't be surprised.
Rockstar Games and its parent company Take-Two Interactive have never announced plans for blockchain or NFT integration. In fact, Rockstar updated its policy in 2022, explicitly banning the use of cryptocurrencies and NFTs on fan-operated GTA 5 servers. So if they follow along with GTA 6 observing that ban, then there's going to be zero crypto involved other than probably in the game you can go rob some Bitcoin ATMs or something. So.
That'd be crazy.
Yep.
It'd be crazy. Okay, let's take a look at the markets here. Right now. Charisma was making a joke. So if we look here, central bank balance sheet still going up. M2 money supply still going up. Nothing's changed here. Gold consolidating around this $4,700 level.
Mm-hmm.
Look like it's trying to find a support there. Oil is still pretty high. I was talking to my parents the other day. They live in Michigan and gas was $5.
Dang.
That's crazy for Michigan. It's crazy for Michigan. I remember as a kid when it was $1.50 and they were complaining. Now, Donald Trump was tweeting, "Oh, stock market at all-time highs again. 401ks are booming. Jobs are up." I don't know about the jobs up thing, but look at that thing. Crazy. We got the Dow near all-time high levels. Got the Nasdaq at put in another all-time high. Let's see how Apple's doing. Apple put in a new all-time high yesterday. Almost $300.
That's nice.
Yeah, Meta not looking too hot. Coinbase not looking too hot. We got Bitcoin at 79.
Mm-hmm.
It's not bad, but you know, this is a key level of resistance here, 80 grand, and it's also coinciding with our 200-day moving average, right? We still need a cross here, so we're still a ways away. I think that we need to get above like this $93,000 level. This is the next major area of support. This is kind of just like no man's land. Like you can see when it was here and it was here, it wasn't really a strong level for bidding on the buying or selling. So until we get to like 93, yeah, I'm just thinking to myself, it can go back down at any time. And like we were saying, like this could be like a bull trap to where, you know, they're pumping it so they can take some profits and go on a summer vacation and come back before the Clarity Act gets passed, if it gets delayed, which is a high probability at this point. You know, we thought it was going to get passed in January. Ethereum's kind of just been consolidating, man. Ethereum's been the biggest surprise in crypto for me in the past couple years, especially since like the Genius Act passed and all the stablecoin stuff is happening and all the stuff being built, integrations, it all kind of flows back to ETH. And you know, even with ETH having like a successful merge to ETH 2.0, it's just like, I know one day it's going to take off, but man, it's been a surprise. But nonetheless, it's still been trending upward pretty much since February, so you can't be too mad at that. And if we look at the total crypto market cap, looks a lot like Bitcoin's chart. Obviously, Bitcoin dominance is, you know, pretty high, right? Bitcoin dominance actually just is putting in new highs, right? We need, or not new highs, but it's just constantly climbing up and up. And the more this goes up, the further away we are from altcoin season, theoretically. I mean, obviously, altcoins should just take off and like steal the share, but it typically, that capital typically flows in and out of Bitcoin. And there isn't, other than the Clarity Act passing, there isn't any other catalyst for new capital to enter, not just Bitcoin, but especially altcoins. So, yeah, other than that, let me see. The ETH BTC chart, that's been going down as Bitcoin has just been rising. So we've kind of been just trending back downward. As soon as we hit the top of that channel, we wicked it. It was like, oh, just kidding.
Just kidding.
Yep, just kidding, guys. Not ready yet. So, yeah.
I heard an interesting theory on ETH.
What's that?
Well, that everybody's eyes are on hype these days for Hyperliquid because that's the main trading hub of everything going on, it seems. And a lot of large institutions have been going the route of private blockchains or blockchains like Canton that don't use ETH as the main gas token. So I heard a theory that maybe ETH is being phased out by the largest players because a lot of traffic's going around it.
Yeah, I mean, like, I can see that. You know, it is not decentralized anymore with the move to proof of stake. And then also, as a business, you know, it's so easy to figure out wallet addresses now. Unless you're like running your own node or like, and it's no more mining ETH. Unless you're running your own node, that's the only way to like be anonymous. So like as a company, it's kind of like it's different levels where you can just be drinking the Kool-Aid in crypto, and it's kind of like a facade. And one of those is kind of like this situation where you have wallets that are anonymous, but they can be traced back. But they really want, what the institutions really want is the transactions to be anonymous, but the wallets to be public. That's what they would prefer. You know, but right now how it's set up, if you can figure out what the wallet is, you can also figure out what transactions they're doing, and it just kind of takes away their competitive advantage, and you know, whatever else that they're doing. So it's just like, I mean, if that is the case, I can see it. You know, that's why privacy has been such a huge narrative lately, and zero knowledge proofs. But at the same time, you know, the players that are a part of the Enterprise Ethereum Alliance, throughout history, whenever there's like a big technological revolution and they want something to be used or passed, they will lobby and they will do everything they can. So I still think they're going to keep fighting for ETH to be the main chain. But it is a fight nonetheless.
Yeah, the biggest thing for ETH that I think is against them is they're slow. They're very secure, but in terms of blockchains, they're slow.
Yeah.
Of course, when you compare ETH to sending money Western Union, it's fast. Or sending money through Swift, it's still super fast. It can be done in like 2 minutes instead of like 2 days. But compared to the rest of crypto, ETH is still slow.
Yeah.
But there was some more privacy shielding just announced. Actually, I heard it today for the first time that Polygon just came out with a shielded token, which could be what saves Polygon if that's true. Because I don't know if anything else is going to save Polygon.
All they got is Polymarket. I
Yep.
remember they had their Polygon ZK EVM and all that stuff, but it's kind of, I haven't really heard anything about them in years.
Yep, and for a while, like some of their tech just literally broke. Like their blockchain explorers stopped displaying stuff. It was very unreliable when you went to their dexes. I mean, it was getting pretty bad. So hopefully, it's gotten better. I haven't tried them. I just heard about the partnership. They partnered up with Hinkle, and they're doing institutional grade shielded stablecoin payments through Polygon.
Interesting. Have you been doing any farming on Polygon? I'm taking it no.
Aave ETH on Polygon is about it. And for a while, I was doing ETH USDC over on QuickSwap. And because there's literally no real competition for Polygon, the fees were pretty good, but the volume really slowed down over there. So I moved everything over to ETH mainnet and to Base and Arbitrum for the most part.
Yeah. Yeah, that's another thing. Like the layer 1 is always going to be slow, but that's what they're making these layer 2s for. And, there's been a lot of institutional, I'm not going to say adoption, but theory/proposed adoption for Base. Like JP Morgan launched their stable coin on Base, and they said that that's the only chain they're going to use it on, and you're not going to be able to bridge it. So, that's what layer 2s are for. But yeah, it's still public transactions though. So it still doesn't solve the problem. Speed is one thing, but the most important thing for them is like protecting their identity and keeping things confidential. Because like even with that, it makes them more of a target. Like then hackers can, this is their wallet, and then they're just a target. So I think real adoption won't happen for institutions until that particular thing is solved.
Yep. I mean, there's one thing about being able to see it. There's another thing about being able to steal it, right? So, every major company goes through audits, financial audits. So this is just another way for them to actually make it easier for them to pass financial audits, because they can just they're like, just read the blockchain. It's all right there. You don't even need me.
Yep.
All the company has to do is say, this is my wallet. There you go. Have fun. Just like everybody I talk to right now, taxes, they're like, if the government wants my wallet addresses and they want to figure all this out, they can figure it all out. I'm like, absolutely. And they have 7 years to do that. So you don't think something's going to come out in the next 7 years that's going to make all this stuff extremely easy and fast to read? You're kidding yourself. Like,
especially with AI.
Yeah.
Yeah, I think the best analogy for this is just like, right now, this is like a car, but with privacy, it's like a garage. It's like, yeah, you lock your car, you have your alarm, you cover it, but you don't leave your nice car in the driveway. You put it in the garage.
That's right.
So we need garages in crypto.
You need to be able to give your car a paint job and a lift kit.
Exactly. And even going further, my dad works for Chrysler, and the new cars, they have like these crazy paint jobs with all these swirls and stuff, so that competitors can't see like the bumpers and like the particular specs on there. So yeah, we need that.
I like that one story they did, and I forget which movie. I think it was maybe it was Tucker. Anyway, he came up with the first idea in his vehicles of the windshield wipers that we all are used to today with the intermittent swipes. Before that, the major dealers at GM could only figure out how to make them either be on all the time or off all the time. They didn't know how to develop the intermittent like delay between swipes.
Oh, really?
Yeah, and so he figured it out. I think it was Tucker. I'm misquoting that, but the inventor figured this out and only let GM see it from a distance. They were not allowed to touch the car. They were not allowed to like open the hood. They were not allowed to see like the interior of the car. And the GM's like, there's a guy in there doing it by hand. And he's like, no, I assure you, sir, it's not. He's like, well, let me see. He's like, no, you can't see. Well, there's a guy doing it by hand, you know.
Oh, like actually in there, like.
but it was. I mean, the inventor actually had it running, but the guy from GM that saw the technology first was claiming that it was done by a guy with a hand, so that he could get a better look at it.
Just under the steering wheel, like.
That's right. But GM saw it and then stole that technology and had to pay this inventor after about a decade of law fights in court. Paid him an absurd amount of money. So,
wow, windshield wipers.
For windshield wipers, it was a literal legal battle for over a decade, and it cost the inventor his family, his wife, all of his money while he was fighting to get that.
Oh man, I hope it was worth it at the end for him.
I hope so. I mean, he got the money. So
how much did he get? A couple million for sure, right?
I have to look it up for sure, but it was substantial.
Yeah, every time I see windshield wipers, I'm gonna think about that guy now. Like, damn man, I hope he's doing good. Damn, lost his wife over some windshield wipers. That's crazy.
Mm-hmm.
Damn. Yeah, well, shout out to him.
All the way back to crypto now.
Yeah. How's your pools been doing, man? What's been some of your favorite pools throughout these? I don't know what to call these times. You know, it's just crypto.
It is. I mean, it's. Well, I mean, let's just call it
pretty slow lately.
Let's call it Iran during Iran's time and tariff time and waiting on Clarity Act to pass. I mean, all these things that we've been talking about for so long. I'm tired of talking about like all of it, right? But it's still here. It still hasn't been resolved. So, to answer your question, he got $30 million from Chrysler and $10.2 million from Ford, and actually zero from GM. So, $40
million.
$40.2 million.
Wonder if he went and got his wife back.
I don't know. Maybe. The guy's name is Robert Kearns. So, anyway, okay. Yeah, I mean the pool's been doing okay. I mean, volume is still way down to prior to what it was 10-10. Like 10-10 fundamentally changed the market, and the volumes have never returned. It scared off tons of retail investors, and retail has not come back yet. I don't know why they're waiting, but it has not come back yet. Maybe they're waiting for the Clarity Act. Maybe they're waiting for the war to be over. Maybe they're waiting for equities to come back down. What's that?
Hacks scaring them.
Hacks. Yeah, the first quarter of this year was bad for hacks. Like,
yeah,
it all went over to North Korea, so they're fat and happy. So, but there's just so much. But also, maybe all of them said, you know what? I don't need to buy my own crypto. I'll just go get an ETF. So it's easier than ever for them to have crypto exposure without actually being on the blockchain making their own purchases.
Yeah, it's a smaller percentage of people who's like, I want to have the responsibility of being my own bank. When you're in crypto, you think everyone wants to be like that.
Mm-hmm.
But when you talk to people outside of it, they don't want that responsibility. Or the learning curve that comes with it.
Mm-hmm.
So
yeah, and for me, I look at it and like from an engineering mind, I'm like, it doesn't make any sense. Why would I go buy an ETF and have all the normal ETF fees that go along with that, and the management fees, and no say in the fund's direction at all? Why would I want to put all that on myself when I could just go buy a Bitcoin and hold on to it?
yeah,
Like, it does for me, from a mathematical and engineering perspective, it doesn't make any sense. But if I sit down in my grandma's shoes, she doesn't understand the market or anything technical about it. She's like, I'm just going to move some of my funds from here over into the ETF, and I'm just going to get some exposure to the whole crypto market right now. And one call one day and done. They don't have to learn anything.
yeah, I can definitely see both sides, man, for sure.
Mm-hmm.
That's why we need to make crypto an easier, safer experience.
Yep. I mean, but with us yield farming, you make a full-time income, and you're not even like not day trading. You're not stuck in the office all day long unless you choose to be. It's you pick what's hot. You go to the place with the most volume. You set up a good range, and then you just see what it returns. And
Sounds like you're describing going to a bar to find a chick.
I don't know how you made that connection. I wasn't thinking about that at all. That costs money.
Exactly.
That costs a lot of money.
Anyway, sorry.
That's right. So, yeah, I have a lot of Ethereum pools. I've been DCAing Ethereum since it's been 12 months of DCAing Ethereum right now. So, like, if Ethereum hits to 2,700, then I have impermanent gain across all Ethereum I've ever bought, and I'll be at a 0 drawdown. So I have a lot of Ethereum. So I'm hoping that it's I didn't put the money in the wrong token. But I have plenty of hype as well, and then I have 2 Bitcoin that I'm holding on to, just using and just borrowing against them, just leaving them there for price appreciation. Because I mean, as well as I do, there's not a good paying Bitcoin farm out there anywhere. So
Yeah, I keep hearing folks talk about, Bitcoin DeFi, and I'm just like, please don't waste your time. No.
I mean, granted, you're doing good if you can get a Bitcoin farm doing higher than like 16%. So.
Yeah, but to think that people are going to start building DeFi applications on Bitcoin and it's like going to overtake EVMs it's a fallacy. Unless there's a law that requires it to be, it's not competitive enough.
So. And Bitcoin wasn't built to be a workhorse.
Exactly. It's like using a Mack truck to pull a Barbie doll house, or driving an airplane down the street. It's like, dude, what are you doing?
Yeah, you and your analogies.
I know. This stuff just comes in my head, man. I'm thinking of analogies because I'm always, you too, I'm sure. We're always talking to newbies, so we gotta make it make sense for them. But sometimes it's kind of outlandish, though, for sure.
All I can say is that gold is heavy and cumbersome to do anything, and that's what Bitcoin is.
Yeah.
Like, it's heavy, cumbersome, and slow.
Yep. So, and Ethereum is just fluid. That's why they call it oil. And just to your point, if you look back to all the big tech stocks, man, sometimes you have to wait almost a decade for things to really pop off, even though things were happening behind the scenes. It's like the whole Chinese bamboo tree. You got to water it for 5 years before it even sprouts out the ground. But when it sprouts, it grows like multiple feet in like a couple weeks or days, or however long that is, months. Definitely think, even all the stuff we were talking about Ethereum and it being phased out, definitely still think it's going to have a place in the future for sure.
Yeah, I mean, it's going to be there. I mean, there's so much built on it. It's going to take a while for them to build something more modern somewhere else. So I mean, it's gonna be there for a while.
Yeah, and even if you think about all the layer twos that are on top of it, to have to unwind all of that, like what? And I like how I was at a Frontier Towers out here. It's a it's a tech tower in San Francisco where each floor is like a different theme. And there's a crypto floor, and it's a lot of like the Ethereum foundations there, and they're doing they're doing a lot to make like Ethereum like quantum computer proof. So yeah, man, I think Solana has a place in the future too. I used to talk so much shit about it, but I don't think ETH is going anywhere, man. It's kind of like the modern TCP/IP in my opinion. And just with TCP/IP, it wasn't the best technology. Just because it's the best technology doesn't mean it doesn't win. We've seen that. So
no, but it was the easiest to use.
I think so.
Yep, and that's from all the protocols I had to learn back when I took computer engineering. TCP was the easiest to use, and any person that heard it the first time could understand it. So it still wasn't the best. It wasn't the fastest, wasn't the most secure, but it just made sense to people.
Yeah. The old client server model.
It's just a handshake, man. Just a handshake.
It's just a handshake. That's it. Well, any other crazy stuff you've been looking into before we wrap her up?
The AI narrative kind of popped off on us a little bit. Virtual is up 7% today. Let me see let me look at a week real quick. I have it on the daily. It's been on an uptrend since February 6th low. And February 6th, it was 51 cents, and right now it's 90 cents. So virtual's getting some action. With most AI tokens, the last 4 days have pretty much been green in an upward trend. It retraced a little bit yesterday, but it's still up quite a bit. I am farming that one. The farming on it isn't spectacular, even though you would think it is, because it's got $11.3 million of volume in the last 24 hours, and the liquidity in the farm's only 776K. So it has a really good ratio there. Market cap is sitting right at 600 million. And you would think that with that amount of volume to that TVL, the fees would be plentiful, but it's not really. And then another one that's been, I mean, that one's good for price appreciation. So don't get me wrong. My target for that is for that to get back up to $6. Back right after launch in early January 2025, it was $6. So it has a ways to go, even though it's up 7% on the day and up almost 100% from 50 to 90 in the last 45 days. It's still got a long way to go. And that's the story with just about every crypto token today. Another one that really popped off was Venice. The ticker for that one's VVV. And they've had some really bullish news on that one. One, they reduced the Venice token emissions permanently. They're getting ready to heavily reduce them again. When Venice hits certain milestones, it sends out rewards to token holders, because as more and more adoptions of Venice happens, it opens up more rewards, and the protocol was programmed that way. But Venice is a privacy-focused AI aggregator, so a lot of people were having problems with their data on Anthropic's AI and several others, and they found out that Venice does what Anthropic does, but through privacy focus, because everything is shielded through the Venus servers before it goes to the AI model, and it doesn't go back to the individual users. So nobody knows whose data is being used in those AI models, which is obscuring the ownership. So that was a very interesting model, and also, when people sign up for subscriptions for Venice, it permanently burns Venice tokens out of existence as a like a leaderboard of its own. They're like, okay, for every pro subscription, we're going to burn 10 tokens. For every basic subscription, we're going to burn like 2 tokens. And so the more people that are using the model, the more of the Venice tokens are burned out of existence, which means everybody's Venice tokens go up. So it's pretty cool. But that one's really been popping off. Zcash is popping off. Like, it was up to 600 a couple days ago, and right now it's had a little bit of a retrace. But literally, it went from 320 to 610 in let me see, 1, 2, 3, 4, 5 days.
Wow.
So.
Man, I remember we were talking a few months ago about how like their team left. Did they ever get that dialed in? What happened with that?
Yeah, so the team went and they made they forked Zcash, but the company still owns Zcash and it's still up and legit and running, and they hired another team. But the original Zcash team that walked away from the ownership started a proof of stake coin called PIVX, PIVX, to be a competitor for Zcash. So I don't know how PIVX is doing right now. Let me look real quick. Yeah, it's too new. New. So, but anyway, and then there's a new there's a new shielded network coming out called Ironfish. Ticker is Iron. See how that one's doing. No, it's not out yet. They're working on it, and they're also working on Dusk. So those are some new shielded networks that are being developed right now. Anyway, so Zcash, virtual for price appreciation, and VVV's returns have been crazy over on Aerodrome. So let me see what else. Siren is another AI play. I think it's more of a meme coin because I can't ever get their website to work, but the Siren token is up 26% in the last 24 hours.
Oh, wow.
So I back in April 16th, the price of Siren went from 65 cents to $2.25 in 3 days. And I rode that one all the way up, and I sold it all at the top. That's been my best trade so far this year.
Nice.
So yeah. I turned 1,000 into almost 3,000.
Hey, that's something to write home about under current market conditions.
No kidding. And now that it started ticking up again, I'm curious if it's going to continue an upward trend or if it's going to stall out, because I missed the opening of it, so I didn't want to jump in like mid-moon, especially because it's kind of getting rejected at 105. So I'm kind of thinking that 105 is going to be the current top of this particular play, and then you wait for it to fall back down to about 52 to 55 cents before considering taking another long position. Let me see what else is popping. Tibber is not popping. It's still paying out well, but it's just not popping.
It'll pop when the time is right.
Yeah. I found it interesting. Optimism actually had a little pop. OP token. I mean, if you look at it from...
Well, we did just have consensus, and a lot of these projects will like announce things and stuff like at conferences. I didn't make it to consensus, so I didn't hear what was said, but I think today was the last day actually. So maybe we'll hear something here pretty soon.
Maybe. So OP was down at pretty much right at 10 cents. Today it's at 14.80. and that low was March 29th. So I got out of OP a long time ago. The OP Ethereum pool used to pay out really well, but ever since,
Even on Gamma, that was the only pool I got in on one of those concentrated liquidity manager vault platforms. The only one.
yeah, and it was paying out really well for a while, and then, and by a while I mean like multiple months, like 3 to 4 or 5 months, and then all of a sudden it just went beep. That's enough of that.
Yep.
But that's pretty much it. I mean, Tau actually got a bid. Let me see. It wasn't crazy volume though. It was more like people just bought Tau and held. So there wasn't a lot of trading going on. So we didn't make a lot of fees in the Tau pool. But Tau went from, let me see, to double check. Let's see. Yeah, so Tau went from 239 and then it topped out at 314 2 days ago. And now we're sitting like at 299. So it had a good little pump, but again, it wasn't a lot of trading. It was like, hey, let's all jump into Tau, and they just bought it and held it. And you're like, aren't y'all going to sell a little bit? Because we need some more fees.
Yeah.
So, yeah, but that's from everything that I normally watch. I mean, I'm always looking for new stuff. Meme season seems to be back a little bit over on Solana, so there's some meme coins out there. I don't necessarily trade them, but I like to look at the different influencers and see their track records in real time. They're like, oh, we're up 4x in this one, 3x in this one, 2x in this one. Oh, sorry about that loss right there. Up this one.
Yeah, lean has been a token that has been popping off lately.
What's that one about?
It's on-chain fixed yield. I went on their website. We were talking about it on the base show yesterday. And it's based on I thought it was like kind of like an on-chain REIT or something, real estate investment trust. But it seems like leans on homes offering fixed yield somehow. I'm not like an expert on home leans, so I don't know what that means. And when I go on their website, it's lien.fi.com. There are no docs to look into, but when I was on the Yield Hunter tool, it was pretty good.
Is the token literally LIEN?
Hold on, let me go
Not
back
seeing it. I'm not seeing that on Deck Screener.
LIEN.
Or is it LFI?
It is LFI.
Okay, gotcha.
Yeah. On base.
Yeah, that's not too bad, but it's hard for me to get behind a token that's only been out for like 6 days.
Oh, I didn't buy any.
Oh, okay.
No. Nor am I. I just heard about it and I was trying to research it, but the website doesn't. We just have somewhere you can put in your email and get some kind of email, I guess. But that's pretty much it.
LFI is the app coin of the LeanFi platform. Fi.com. Interesting.
Yeah.
There's some issues on the security scanner on Deck Screener for the LFI token.
No surprise there. It's just people talking about it a lot on Twitter.
Yeah, there was I mean, obviously you can invest in maplefinance for private lending. I was looking at Onry, ONRE, no, ONYC. So that's an on-chain yield token. That's not the one I was thinking of. ON. Anyway, there was one. There's two. One of them is insurance, on-chain insurance. So crypto token based on insurance premiums. Let's see. No, let me see. Nexus Mutual, obviously we know about that. Ether Risk, AMs. That's not the tokens I was looking for.
Asteroid still looking pretty good too.
Which one?
Asteroid, which is supposed to be like the meme coin mascot for Tesla.
Oh, Asteroid. Let's see. The space, Shiba Inu. Dun, dun, dun.
It's been holding that level. I first learned about this a couple weekends ago when I went to the SF art fair. A friend of mine to help her get into a pool. I thought it'd be dropped by now. She's still in there. She's probably been doing good.
Yeah, I have to think about. But I've been messing around with Pendle and Morpho. So
We should do a live video on Pendle yield farming strategies.
yeah, I got to keep learning a little bit more before we could do a video.
Everything there is about Pendle. We know you know everything about it now.
I've been like, I've tried this to see if it works, and I've tried this to see if it works, and I've gone back to the docs to try to understand the math behind why this works. Still working through that.
Yeah,
but Pendle is very complex, so
to say the least.
But the underlying stretch Pendle tokens that they have, again, stretch is paying out about 11.5%, but the Pendle token for Apex Finance, which is based on stretch, is paying out 16.5% for just holding it, and it's 45 days at a time. But then you can take that 16.5% token and you can go and loop that on Morpho about 5 times, and now you're making about 60% APR because what you're paying for the loan against your Pendle tokens is a lot less than the yield you're making on the Pendle tokens. So every time you do that loop and you're like, okay, well, I'm going to put in my 16.5% token. I'm going to take out my 5% loan cost on the USDC, and then I go buy more 16.5% yield token. And then I just keep doing that loop until it gets to a liquidation value that you're comfortable with. And so it's interest rate arbitrage, and it's beautiful. The problem is Pendle tokens only last about 45 days. So every 44 days, you have to go and unwind all your position to get all your profit. And then when the next one comes out, you have to build it back up again. So there's a website called yields.io, and it's not the easiest one either, but yields.io gives you the tools to do those automatic looping and do all the calculations for you. So you don't have to sit there and manually like loop this thing.
Yeah, that sounds like a headache. I'm looking at the Pendle chart. Since April 7th is up 83%. And it went up high as like 105%.
Yeah, we're sitting at about $1.90 right now.
Yeah.
So that is very good, but I also want that one to get back up to $6.
This one surprised me too. Like, dude, crypto is just full of surprises, man. It's like the fundamental value of a project doesn't always get translated in the price.
Yeah, but it has to do a lot with what the protocol does to support the token.
Yeah.
Like if every protocol supported that token with increasing yield or paying dividends to token holders, like stocks work today, then the tokens would retain their value a whole lot more if it was a profitable project. But there's so many projects out there that use it as a liquidity grab, like right at the beginning, to fund their development or to, get eyeballs and use it like an advertising expense rather than a way to distribute company profits like they do in equities.
And the reason why is because stocks represent equity in the company, whereas tokens don't. There's still a company behind it, and the token is just like this little thing that you can use for whatever.
Well, that's why they came up with governance tokens. Everybody that had governance tokens was supposed to vote on all major proposals. And so that makes sense. But you have to have a lot of tokens for your votes in that environment to make a difference. And there's only like the casual investor is not going to amass enough to like have any influence whatsoever.
Yeah, and you're still voting without equity.
And you're still voting without equity. But if your vote goes through and says, okay, well, we're going to do this amount of token buyback and burn, then that should have a positive impact on the token price. And then right now, though, unfortunately, there's no way for people to preserve that token price because somebody could buy a bunch of that token right before the vote's taken, stuff gets burned, and then they just dump it all, and then the price comes back down. So,
yeah. I wish they would. I wish tokens represented equity.
But then every token would be a security, and project owners don't want to deal with the SEC.
Yeah, that's why we need the Clarity Act.
I was looking at how much it costs to get a project up and running that would require registration with the SEC for like a mini public offering, which means you can operate up to either 50 or $100 million. It's and it's not that the fees with the SEC are a lot. In fact, it's very reasonable. But in order to meet the filing requirements, you have to have like CPA audited books, legal reviewed documentation. I mean, you have to pay a lot of very expensive people to do things to examine everything to make sure it's exactly where it needs to be for the SEC. And that's why the individual cost is somewhere between $500,000 and $1 million if you're going to go that route. SEC portion of that is less than 2%.
And you have to wait
A long time.
For approval periods. And sometimes stuff comes back negative. You got to refile or whatever.
Exactly. And you have to pay all those people again.
Yeah.
So, but every one of these companies that have put up ETFs, just know that they're paying somewhere between $500,000 and $1 million every ETF that they put out there. So you gotta think that they are not doing these ETFs lightly. Like even the guy that did an ETF for Doge token, like he's like, oh, $1 million is a drop in the bucket for what my Doge ETF could be. I'm like, Doge doesn't hold value. What are you talking about? It has a couple of like moon runs and people are happy and they sell it all.
Yeah, crypto is a crazy place, man. It's like La La Land for sure. If La La Land was a real place, this is it.
Mm-hmm. Ooh, well, that's about all I got for tonight, man. There wasn't anything brand new this week or anything crazy. Just the AI narrative popped off, privacy popped off. Bitcoin did get almost up to 84 and now it's back down to 79, waiting to see where that one's going to go. Solana's been freaking sideways for, it feels like 2 or 3 months now, just going between 80 and 90. And then that's perfect for farming, but it sure is boring. So
it sure is boring.
Yeah.
Well, guys, we're going to go ahead and stop the recording. Hopefully you guys got some value and we will see y'all on the next one.